Good morning and welcome to the Business Show, your go-to source for money and finance news in 10 minutes or less. I'm Andrew Gincola, and today we're going to be covering the TikTok war is heating up. Amazon, AppLovin, and a bunch of other companies are vying to see if they could buy the American version of TikTok. And tariffs are rattling markets, specifically in the retail sector, where Apple, Nike, and Walmart stocks drop hard on a new trade policy. And Restoration Hardware crashes 30% as the luxury retailer calls it the worst housing market in 50 years. And Nintendo has announced a new console called the Switch 2. And lastly, auto prices are also surging because of the 25% on tariffs. We're going to dive into all that and more. Let's get down to business. So with just days left before TikTok could be banned in the US, the competition to acquire its American operations is intensifying. Amazon has officially thrown its hat in the ring, confirming a bid submitted to President J.D. Vance and Commerce Secretary Andrew Lutnick. Meanwhile, AppLovin is also reportedly deep in negotiations to take over the wildly popular social platform from Chinese parent company ByteDance. Now, Amazon sent a formal acquisition proposal this week to the U.S. officials in a bid to acquire TikTok's U.S. assets. And AppLovin is negotiating its own deal to buy the app, with backing possibility involving former CEO Steve Wynn. Now, ByteDance must divest TikTok by this date or face a U.S. ban, though Trump has hinted at a potential extension. Now, TikTok's massive user base and influence in the digital ad world could make this one of the most coveted assets in the tech world right now. And most of you know that a lot of folks are using TikTok, and there are a lot of users being acquired over the course of the last year. It used to be for younger users, Gen Z and alike, but now millennial users, Gen X users, and even baby boomer generation is all utilizing TikTok now. Now, whoever buys TikTok will shape the future of social media, digital ads, and influencer reach in the US. And a successful bid would signal a major power shift, especially if Amazon enters the short-term video race. That would be a very, very interesting thing. And if you think about this for a second, Amazon would be looking at this because of the live shopping experience that you do have on TikTok. TikTok Shop has a massive live shopping experience, which would be fascinating for the retail giant Amazon. Now, the race to own TikTok is on, and the winner could redefine the future of online influence, ad dollars, and tech power. We'll keep you posted on this story. Now, the president's latest tariff announcement is shaking up Wall Street, and global consumer giants are taking a hit. Major retailers and tech firms with deep ties to Asia are seeing shares sink in pre-market trading as investors brace for higher import costs and disrupted supply chains. Apple drops 7%, and the tech titan manufactures roughly 90% of its products in China. Nike falls nearly 10%, with most of its suppliers based in China, Vietnam, and Indonesia, and it is feeling the force of this tariff wave. Best Buy, Dollar Tree, all their shares are also down 10%, including Walmart and Target are each roughly off by 5%. So this just is going to signal that most investors are looking at this short-term impact of tariffs, and they're trying to predict what is going to happen in the future, and so retailers are taking a hit currently. Now, if you're someone who is a long-term investor in some of these retail giants, should you make a move, it's up to you. But if you're a long-term investor, typically these short-term impacts are not something that you would want to make. Now, along that same space, Restoration Hardware is getting hammered in pre-market trading, down nearly 30% after sounding the alarm on what it calls the worst housing market in almost 50 years. The luxury home retailer issued a gloomy forecast and missed Q4 expectations, sparking a panic for investors. Now, these shares are down nearly 30% after those disappointing earnings, and the company expects revenue growth of just 10 to 13% in fiscal 2026, way below Wall Street estimates. Now, Restoration Hardware cited a higher risk business environment driven by ongoing tariff uncertainty, and both revenue and adjusted earnings per share fell short of analyst expectations. If you are someone who invests in companies like Restoration Hardware, you know that these are going to fluctuate based on what is going on in the economy. These are not recession-resistant businesses whatsoever, And so if you are a long-term investor in something like this, you have to anticipate that you will have cycles of up and down. Now, Restoration Hardware's premium brand can't outrun a collapsing housing cycle, and investors are feeling this hit. Because it caters to these affluent homeowners, this is going to be something to continue to watch as the housing market is still in limbo. Now, Nintendo just dropped some details on the long-awaited Switch 2, and gamers are buzzing. So launching June 5th, priced of $450, the second-gen console is priced closer to Xbox Series X and PS5. But it's packing serious firepower and new social features to aim at revive flagging profits and redefine the handheld gaming experience. So typically when a lot of these new consoles come out, there is going to be a difference in the stock and you're going to see a shift in the stock. Now the Shift 2 hits shelves on June 5th for that $450 or $500 with an exclusive open world Mario Kart title. The console boasts 8 times more storage, backwards capability, and magnetic controllers that double as mice. Now, the Switch 2 is Nintendo's most ambitious console yet, targeting hardcore and casual players alike, and so we want to see how this is going to impact the stock. I would take a look at Nintendo over the course of the next couple of months. We'll monitor this over that time frame, but usually when new consoles come out, it usually helps the stock. Now, brace for a sticker shock because new vehicle prices in the U.S. could jump by thousands of dollars starting today as President Trump's 25% tariffs on all imported cars and select parts go into effect. Now, analysts say the move could reshape the auto industry and hit your wallet. Now, car prices are already at record highs. You're probably already seeing this. And analysts at Cox Automotive warn average car prices may rise up to 20%. And some of these estimates are coming back as a rise in as much as $10,000 per vehicle. Now, Canada and Mexico are the ones that are getting hit the most hard, and they could see average prices rise as much as $5,855, shaking up the U.S. auto market. Now, there are some car makers like Ford, GM, Nissan, and Toyota who all rely heavily on Canadian and Mexican plants, but Ford is the least affected with 80% of its production in the U.S. So Ford price hikes may be minimal compared to some of its rivals. So if you're in the car market and you see these prices start to shift, Ford may be someplace that you want to continue to look. Now, over 20% of the cars sold in the U.S. are imported from Mexico or Canada, meaning millions of buyers may feel some of that pricing pressure. But again, it's only 20% of the cars sold are from Canada and Mexico. The Ford CEO warns that tariffs could blow a hole in the U.S. auto sector, and Cox is already set to cut 2025 sales forecasts. Now, Tesla also builds a lot of its cars in the U.S., though imported parts like Chinese batteries will still sting. Now, from dealerships to driveways, the road ahead for car buyers just got a lot bumpier. Thanks again for tuning into The Business Show. If you know someone who would find value in this episode, share it with a family member or a friend. Also, if you enjoyed the show, please take a moment to leave a 5-star rating and review. It helps us reach more people with this message. And don't forget to follow the show on Apple Podcasts, Spotify, or your favorite podcast player. Thanks again for listening, and we will see you on the next episode.